Don't look for the needle in the haystack, just buy the entire haystack. This is an investment philosophy from John Bogle, the founder of the Vanguard Group. It was his way of telling us that we can get broad diversification by investing in low-cost funds instead of picking individual stocks. By buying the entire stock market, investors can achieve market level returns over time. I'm Lisa J. Stocks, and in today's video, we're going to be taking a look at ETFs and index funds that give you exposure to the US stock market. So we'll be taking a look at 6 different funds that will give you a slice of thousands of US companies, from Apple to Costco and even Build-A-Bear, taking the guesswork out of it for you when it comes to figuring out which one is the winner. Before we get into the funds, I want to talk about which amounts are the best fit when it comes to index funds and ETFs. And what drives the difference is taxes. So when it comes to IRAs or retirement accounts, 401ks, mutual funds are a good fit. They are tax deferred when it comes to their growth, and it lets every penny compound. You won't have to worry about capital gains and losses because these tax implications don't apply to investors holding a fund in these type of tax deferred accounts. Then when it comes to ETFs, taxable accounts are a good fit for tax efficiency. Why is that? They have less capital gains distributions, meaning less impact from that IRS. Now, let's get started with the first fund that we're going to be taking a look at. One of those ones that are ideal for an IRA, which is an individual retirement account, by the way. They are tax advantage accounts for long-term savings with penalties for early withdrawals. So definitely think through what you can invest for the long term and not touch until your true retirement age. The first fund we're taking a look at is VTSAX, and it is the Vanguard Total Stock Market Index Fund. This fund has been around since 2000, and it gives exposure to small, mid, and large cap growth and value stocks. It has an expense ratio of 0.04%, assets under management of about $2 trillion, a 5-star Morningstar rating, gives you exposure to 3,524 different stocks. It's most heavily weighted in the technology sector, but because it is a fund that gives you exposure to 100% of the investable US stock market, you're getting true diversification and exposure to all of the sectors, with, as I said, the largest exposure to technology at 36.6%. Other larger sector weightings are in consumer discretionary at 14.5, industrials at 12.7, and financials at 11.5. And the top holdings are going to be those companies with the largest market cap, like Nvidia, Microsoft, Apple, Amazon, Meta, and Google. It pays a quarterly dividend, and the last dividend payment was 0.437 cents per share. So one negative when it comes to Vanguard is that to invest into their index funds, there is a $3,000 minimum. But later on, we will be looking at a Vanguard ETF that does not have that requirement. Those are available at $1 to start investing, as noted right here. Next up, we're going to take a look at FSKAX, and this is over at Fidelity. No minimums to start investing over there, no transaction fees. This is Fidelity's Total Market Index Fund. It has a lower expense ratio at 0.015%. It tracks the Dow Jones Total Market, and this is the lowest when it comes to fees of the 3 funds that we're looking at today. I'm not going to get into the sector or holdings again, because all 3 of the funds that we're going to be touching on give that same broad total stock market exposure with a quarterly dividend of about 1.2% and similar performance. The last fund that we're taking a look at is the Schwab Total Stock Market Index Fund. It has an expense ratio of 0.03% and tracks the Dow Jones Total Stock Market. Like Fidelity, no minimum to invest. And taking a look at the performance of each of these funds, they're going to be pretty much identical. 1 year, about 16%. Over the last 3 years, 19%. Over the last 5 years, about 14%, and over the last 10 years, also about 14%. So an average rate of return of about 9%. And I was taking that data from the Vanguard site for ticker symbol VTSAX, but as I said, it's going to be the same for FSKAX and SWTSX. So now we're going to move on to those exchange traded funds, those baskets of stocks that trade just like stocks on the stock market, the ones that might be a better fit for your taxable accounts, those brokerage accounts that give you more flexibility, but gains are taxed. So tax efficiency matters. We're going to take a look at 3 picks that are low cost and give you that diversification. If you've been here before, you already know I'm about finding a fund that suits your needs, your goals, your risk tolerance, but also is the best fit when it comes to those expense ratios. The 3 funds that we're going to be taking a look at in this category are going to be SCHB, ITOT, and VTI. They're all classified as U.S. stock market funds, but they differ a little bit. VTI is the most comprehensive because it includes the microcap stocks, while ITOT is broad but excludes some of those microcap companies. And SCHB, which is technically a broad market ETF, but still very diversified. All 3 of these funds will give you exposure to thousands of holdings through this one investment choice. Okay, first up, the Schwab U.S. Broad Market ETF, ticker symbol SCHB. It has an expense ratio of 0.03%. It tracks the Dow Jones total market, has a dividend yield of 1.15%, but has less holdings at about 2,400s. Next up, let's take a look at ITOT, which is iShares Core S&P Total U.S. Stock Market ETF. Expense ratio 0.03%, gives you exposure to 2,488 U.S. companies, and no additional fees or limitations on how much you needed to get started investing. And last up, we have VTI, the Vanguard Total Stock Market ETF. It has an expense ratio of 0.03% and gives you exposure to 3,524 different stocks. And even though the amount of companies in these funds vary, the performance, just like the index funds that we took a look at, are pretty much identical. I have VTI, SCHB, and ITOT all on this chart together. And here's a look at the year-to-date performance for these 3 ETFs, all at about 14.3%. And when it comes to these funds, the one that I've been investing into is VTI. And I'm going to share my position. I'm currently up 34.81%. I have 32.7 shares. I built up this portfolio to over $10,000, $10 at a time. This amount has been invested for the last 1,114 days. I've been investing daily for 159 weeks, which is 36 months or 3 years. A challenge that I started in Keenan Grace's Discord years ago and decided to keep going to become a foundational investment when it comes to my taxable portfolios. So investing into the total stock market or broad U.S. market is an easy way to be on track to build wealth. The performance will vary based on economic trends, interest rates, corporate earnings, so many things, but you're getting diversification. Your risk is spread across thousands of companies. So it kind of has a built-in safety net. Of course, you don't have to pick those individual stocks. You get low fees, basically a stress-free way to get started with investing. Or incorporate that diversification and stability to your portfolio if you need that. Drop me some comments below and let me know which fund that I covered are you holding in your portfolio. Or did I bring something new to your attention that you're going to incorporate? These type of funds will give you an average return of at least 7 to 10%. Reinvest those dividends and let compounding do its magic in order to build wealth for you and your family. If you're not investing yet, don't put it off any longer. You can open an account at one of the brokerages that we touched on today, like Fidelity or Schwab. You can invest using fractional shares. As I've shared, I built up my VTI position $10 at a time. So whatever the stock price is, there's no reason for that to hold you back. Automate your contributions to the account that you set up and automate those investments. Have those dividends automatically reinvested in order to fuel your portfolio's growth. Make sure to keep your account invested until you are truly ready to tap into it, especially that retirement account. No early withdrawals. Just choose an amount that you know that you can stick with long term. Ignore the crashes and the ups and downs of the stock market. Remember, with this investment choice, you're owning the whole haystack, all of America. And so it has proven itself the U.S. economy will recover. Remember, again, it's okay to start small. Just be consistent. Make sure to leave me some comments, questions. Let me know what's going on in your investing journey as we enter the last quarter of 2025. Thanks for watching. If you haven't already, make sure to give this video a thumbs up, hit that notification bell so you can keep up with all of my videos and live streams. You can support the channel by joining channel membership and using my referral links. I hope you enjoyed this video. Okay, bye.